All right, guys. So I'm Jonathan Powell, the County Connoisseur, and today I'm actually bridging the gap a little bit between what I do with the County Connoisseur and my actual day job, which is being a real estate agent, by sitting here with Wes Wilkes from First Home Mortgage. And he's going to be pulling back the curtains for us a little bit about what goes on behind the scenes in the mortgage business, and also just tell us a little bit more about himself. So, Wes, thanks for having me.
Yes, sir. Thanks for having me. My name is Wes Wilkes with First Home Mortgage. I started in the business in 2013 with First Home, left for 2 years, like 2015, 2017, tried the big banking side, worked for, two large banks, and quickly realized that the local lending is what I wanted to do. Came back to First Home in 2017 and kind of been here ever since.
Okay, cool. So what made you want to work on the local side more than the big banks?
When I first went to the big bank, I quickly realized you don't have as much control and as much creativity of getting things done as you did with a local lender. So a lot of people don't realize you have the big banks, the Wells Fargo's, the Bank of America, the M&Ts. When you go to one of them for a mortgage, you're set by their rules, their guidelines. If it doesn't work within their parameters, they can't get the deal done. You have brokers, they're going to get your deal or get your contract, and they're going to send it off to someone, and they don't really have much control of it. If you call them and say, hey, what's going on? They have to call a third party. First Home is what we call a correspondent lender, meaning that we work with many different investors. So we're going to see, you may not fit under this box, but maybe fit under this box. So we're able to get creative on how we get a deal done or how we get the loan done. Also, how do we navigate one person's kind of unique situation? So for me, going to the big bank side and being really constricted on how to get loans through, I didn't want to lose all control by going to the broker world. So I came back to First Home, where I would kind of have the best of both worlds, working directly with investors, but also able to navigate and see who's going to have the best option for the buyer at the time.
That makes a lot of sense. I think a lot of times when people think about real estate, for instance, they watch all the HGTV shows and they're like, oh my gosh, there's tons of drama. There's lots of things that are happening on the background. And so people have begun to appreciate what a realtor does on the back end a lot more. But as we were talking before off air, there's no mortgage lender shows, and yet it's just as dramatic and is just as wild. Could you tell me a little bit more about what are some of the things that happen behind the scenes that just people don't know about?
There's a lot that goes into it that a lot of people don't realize. I try to tell everybody up front that you've got to set your expectation, that if you think it's going to be smooth, as it should be, but if you don't think there's going to be things that are asked from you, it's going to be a stressful process. You have to know that throughout the entire time, you're going to be asked for things. So, don't stress, but it can be stressful.
It kind of makes me think of marketing and sales in some ways. It's like the easy sells, but the reality is the reason why there's mortgage professionals, real estate professionals, et cetera, is because with every single step in the chain from the pre-approval to the closing table, each one of those links can break.
They can.
And when they break, that's when you come in. And you had mentioned you had even people falsify documents before. It reminds me of the very first deal that I was ever a part of when I was in real estate in New York back in like 2017. I was a young guy, I could do graphic design and things like that. And so a buyer had asked me, hey, Jonathan, can you just change the dates on these bank statements? And I was like, for the moment, I was like, well, yeah, I could do that. Yeah, sure. But I'm like, what is that for? And she's like, oh, well, I just need to show that the money was in my account for 90 days or what have you. And it's just no big deal. It's just time. And I'm like, I don't know if I'd be able to do that for you. But
mortgage fraud's a real thing, and you can go to jail and pay a lot of money for it.
With all those different links being possibly broken in the chain, do any stories come to mind?
I've had people quit their job a day before settlement and not realize that we do a verification right before closing. But I had one guy, he quit his job right before settlement, and I called him, and his first response was, oh, I didn't think you'd find out. Surprise, we found out. We always tell people, hey, don't go run your credit on anything and no big purchases. Don't go open up any new trade lines. That happens pretty common. I've had people go buy a car throughout the process. It doesn't automatically kill the deal. It can in some cases, but sometimes now it's just we've added an extra layer of paperwork we have to go back and do. I joked about people falsifying documents. I had someone falsify pay stubs early on. I started 2013. This is probably 2014, 15, falsified pay stubs. And we went to go verify that. They were like, you don't know who this guy is. So, it happens, and it happened to me. And I learned really early, there's a lot of people that are going to do things to try to get a house. We get a lot of questions about, is there going to be another market tank? I always tell them no, because the lending rules are way stricter now than they were in 2005, 2006. We see that every day where people think it's like that. Like, well, it wasn't this much work to buy my house in 2002. It wasn't. Everybody could buy a house back then.
Yeah, and we paid the consequences for it.
We did.
What do you think is one of the biggest myths around mortgages?
I would say the biggest myth is that you have to have excellent credit. And I don't say that to say you can have bad credit, but you just need to have good credit. Most people think excellent credit, 700 and above, is what's going to be needed. We have programs on 620, 640. I know there are some brokerages out there that offer programs to 580. For us, we say 640 is kind of the minimum. 660 is a safe number. So 640, we have to maybe look at some things, get unique about it, but 660 things get a little bit easier. I would say that's probably the biggest misconception, is that people think you need 700, 740, 750, but there's a lot of options out there.
Yeah.
A lot of really good options, with no money down, with low interest rates. You have options. There's a 660 credit score for someone who in St. Mary's County makes less than $130,000 a year. You can buy a house with no money down.
Oh, wow.
People don't realize that there's a big program in St. Mary's called a USDA loan. It's for rural areas. It's based off population density. For 90% of St. Mary's County, you can do a USDA loan for no money down with a 660 credit score. If you're a family of 5, that number's up like 150, 160, something like that. It gets up there.
Yeah, that's really good. And I think probably, especially with the USDA loans, people think that they got to be buying a farm in order to take advantage of those.
We're very fortunate in Southern Maryland, especially in St. Mary's County, where you have a ton of options for no down payment.
That's awesome. So obviously you're in mortgages, and so there's a degree to which finances is always something at play. But over and above kind of the simple stuff of making sure there's food on the table and paying the bills, what's one of the things that motivates you to do what you do?
Me and my wife bought our first house in 2010. And I remember going to settlement. We were a young couple, and she cried getting the keys. And I was like, as a guy, you're just like, it's not that big of a deal, But then you see your wife getting emotional, you're like, oh, this is a really big deal. I mean, me personally, my mom didn't buy her first house until she was, in her 30s. When I'm at 23 years old buying my first house. And I was like, that's really, really awesome. My wife was like so taken with emotion that she cried at the closing table. And I was like, I thought about my process. I was like, maybe I'll get into real estate. I was like, I didn't really want to be a realtor. It just wasn't really my lane. But I was really impressed by the guy who did my loan. I remember the whole process and how well he did with us. For the most part, he held our hand through a lot of the process, being a young 20-year-old, not knowing what's going on. And I remember every time he called me, what's going on? Are things falling apart? He's like, no, it's fine. I need this. I'm like, okay. I will always remember this person because of the way he helped us. And I was like, you know what? I'm going to try that. So I had another buddy who was in the mortgage business, called and asked him, and he was like, we're not hiring right now, but he's like, why don't you talk to Jim? Jim's the guy who did my loan. Sure. Reach out to Jim, and he was like, let's talk about it. Here I am now, 10 years in the mortgage business, and he's my manager, and I'm still in the business. And it was because of the way he handled the situation and seeing how my wife reacted that I was like, you're offering something. For a lot of people, I can't name the number of people, they are the first generation of home buyers in their family. And that's a pretty amazing thing when you think about it. I mean, I've had multiple people cry at settlement. I grew up with a single mom, so single moms, when I have a single mom who's trying to raise a family and they're buying their first house, I mean, that's huge for me. It's a pretty cool thing when you get to see that expression, that look on someone's face. And I just did something that no one else in my family has ever done.
Yeah, that's really cool. A lot of times people see purchasing a house as being some big milestone, some kind of big step, and they just kind of perceive that from the language and the kind of the emotions and the way people treat home ownership just in the ether. The reality is that it is a big step because it's like the number one way that people have built wealth for a long time now. From the perspective of the finances, it is a big step, but also from the perspective of, for a lot of folks, building a family, establishing themselves as kind of an adult.
I remember the first time I cut my grass at my house when I bought it in 2010. Push mower, and I remember thinking, is this what my dad felt like? But this is mine. Our first house when I was growing up and a kid, they rented it. They had to pay a check to a landlord every single month. It's a really good feeling, and I never lost that.
I felt that the same way, not necessarily in cutting the grass. We're moving in, getting our stuff together, and one of our neighbors, really nice lady, she's coming over with cookies and they're hot out of the oven. And I was like, man, this is so cool. And previously when I rented, I never got to know my neighbors. I wasn't knocking on anybody's door and bringing gifts and things of that nature. But as soon as I bought and owned a house, that's exactly what I was going to do. I was like, I'm going to go see my neighbors and talk to them and see who they are and be connected.
And with that, I'll also share, I've told my daughter, as soon as you can buy a house, do it. I bought my house in 2010. I sold it and made a decent amount of money and used it as down payment on my next house. It's a stepping stone too. People don't realize that they want to wait for the perfect time to buy the perfect house. Buy something that fits your family needs at that time and step into it. And I've told my oldest, I've stressed to her, 401k and buy a house as soon as you can. You're 22 years old and you're making $60,000 a year, go buy a house that fits your budget. It may not be much, but who cares? Because in 6-7 years, you go to sell it. Not only do you get the tax help every single year, but you now have equity to roll it to the next house, or you've got a rental property for an investment.
Yeah, that's exactly it.
It's going to take these peaks and valleys. But one thing is for sure, if you hold on to it, you will get that value back. So even through a quote unquote crash, those people that bought a house in 2005, if they would have sold in 2022, they would have made money.
Is there anything that people wouldn't expect, but you would want them to know about working with you in particular?
If you come to me, you're going to get a personal touch. That it's not just necessarily a transaction. I've done loans for people multiple times and they still will call me, text me. That door is always open. So it's never just a, hello, goodbye. There is something to that small local lender. Having that personal touch is going to be one of the bigger things that I pride myself on.
For anybody who is thinking about purchasing a home, maybe even refinancing, or they're looking to purchase an investment property, how can they get in contact with you?
You can reach me at my phone number is 301-752-2080. You can call or text me, and then I guess share my email and my website. I'm also on social media, Wes Wilkes on Instagram and Facebook.
Well, again, I really appreciate you having us come through and sharing a little bit more about yourself and what you're doing. All right, man.
Thanks, Jonathan.
Good to meet you.